Because a lot of people are just panicking and they don't need to panic.
Yeah.
Hello, welcome to Swaddy Crowd. My name is Rob, and today we're going to be talking about cryptocurrency. Yes, I've gone down the rabbit hole of investing and losing and selling at the bottom, or is it selling at the top? I don't know, I'm down like 98%. But anyway, you kind of get hyper focused into all of this gaining and losing. You kind of forget about paying taxes for it. This is capital gains tax, and depending on whether the exchange currency is in this country or another country, it's all coming up in today's video to do with cryptocurrency taxes with Cole Turner.
All right, so we are joined again by Mr. Cole Turner. He is our tax professional, although he would like to be called something else, more professional every single video we make. Today we're going to be talking about crypto taxes, the implications, what you should be doing, kind of how it reflects on you living here in Thailand or whether you've been here over kind of 180 days.
Let's talk about what the rules are for Thailand. So it's a remittance tax basis, which means you're only taxed if you're a Thai tax resident, 180 days or more, and you bring in gains. So for crypto gains, if you sell on overseas exchange, let's say Kraken, for example, and you make a profit.
We've got a BitCub here in True Digital. There's a lot of kind of crypto stuff here, actually.
There is, yeah. But let's talk about overseas exchanges first. That's different to Thai, you see.
Sure.
So overseas exchange, you sell some assets, token, whatever you sell, you make a profit. If you bring any of that money into Thailand, so transfer into Thailand and you've sold it in a Thai tax year, so you've been here 180 days or more, then you need to put down the gains that you've made on a Thai tax return, and they're taxable. If you pay tax elsewhere, you might be able to deduct off the tax, but it depends on your own circumstances. Yeah. So for these people, if they bring the money transferred to their Thai account, or they send it to a car showroom or wherever.
Maybe deposit directly from the website to their Thai account, maybe, or perhaps they might do it to their American account, then from the American account to the Thai account to try and maybe circumvent it. And we were talking about this previously, actually, in a video about how the governments now, they're all kind of talking to each other, right? So they'll know that it's going from, you know, a crypto exchange to whichever country you send it to. We've done like an avoiding tax video. I'll link that down below. It doesn't matter how you get it in or out. They're going to know where it's come from and why. So for the most part, they have to declare the capital gains.
The capital gain percentage of the money that they brought in or spent here, that's what needs to be filed on a Thai tax return. So it might be quite complicated for people who've been trading crypto to look at the gains and how that's sort of come about. So that's where we can help with.
There are some websites that actually collate it all for you, and they can see like all your trades and everything, and they work out exactly how much tax.
Yeah, like Coinly's quite good for that.
Coinly, so I was going to recommend that actually. Yeah, I've used Coinly before, and it's able to like log into all of your accounts using like APIs, and you can work out exactly how much tax you have to pay. Actually, I've used Coinly before, and it's able to like log into all of your accounts using like APIs, and you can work out exactly how much tax you have to pay and stuff like that. I think
it's okay, but if they've got a really complicated case, it just doesn't tend to work. So they've got to, they've got to do a bit of due diligence themselves. But if they do bring the money into, if they keep the money overseas, don't bring it into Thailand, they don't have to file it on a Thai tax return. There's nothing to do. But if they do bring that money in and they live here 180 days or more, they've got to file that on a Thai tax return. So it might be the case of bringing in other money, you know, cash in the bank from previous years or not taxable assets rather than that. So they might have to just manage what they're bringing in. If they are living on it, then tough, they'll just need to file for what they're doing. If it's a Thai exchange, it's different. So if they've got a local Thai exchange, you know, they've got crypto on a local exchange, if they do sell those assets in the year, they have to file a tax return on the gains. Regardless.
Is it a different percentage on the gains for a Thai?
Thai account? No, it's both the same. So it's added to your
Thai exchange. Is it different on the capital gains here than it is like say in the US?
No, it's the same. So if you bring it in, the gain is added to your income tax for that year. So you get allowances, deductions, things like this. But you know, if they do make a gain,
where I pay all my taxes.
But if people are here less than 180 days and they sell something overseas and bring that in, then they don't have to file a Thai tax return. So people don't need to worry. They don't need to panic. It's just they've got to make sure they follow the rules if they do have these income sources, because things have changed here from the 1st of January onwards.
And it's becoming more and more of a digital world. I live here near the digital park actually, and I've got like a bunch of Thai exchanges coming in. It's getting more and more popular, and all of the banks will communicate with them. There's KYC, there's a lot of forms to fill out. So it's definitely worth keeping an eye on the crypto taxes, which is easier said than done. We've mentioned Coinly as well, which I have used in the past, where you can connect all of the exchanges you've used. Me in the past, I've use like 5-6 different exchanges at once, and I'm like, oh, how do I figure this out? I used Coinly.
Right.
Thankfully for me, it worked. It did not work for my friend.
There's
just so much for it to figure out. But Coinly would probably maybe do a better job than a tax professional, maybe, or do you think they'd be able to?
It depends.
It's so difficult, isn't it? Like,
so they can calculate the tax, but then actually what they also need to do is then work out what they've brought into Thailand. So that's where we can help and just do the assessment. If people, if they want to look at back tax filing or filing for now, or if with one of our accountants, they can do some planning to say which one should they bring in, which one's better to remit in terms of the gains. So there's a bit of work that can be done
this year or next year. And
exactly. It just depends on their circumstances. Yeah.
Brilliant. Well, thank you very much for your professional advice today. If you need a hand, something like that, and you think, oh man, I wish I had a professional tell me, all of Cole's details will be down below, and he'll probably do a better job than I ever would. So thanks very much.
Thanks.